Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So this is another stock market weekly recap, guys. If you've been following us, welcome back. And if you're new, what we do is we look at the previous week in the stock market, see how it did. We're observing some stocks and mutual funds and just seeing how they do. This is for the week of September 4th, 2017. And hopefully you had a good week, guys. We did have Monday off for Labor Day, so it was actually a 4-day week for the stock market. However, it did go down because of all the hurricanes happening. Last week we had Hurricane Harvey, and this week, actually right now is happening, is Hurricane Irma. So hopefully everyone last week in Texas, this week in Florida, everyone's alright. Stay strong. So we're going to start with the overall market. We're talking about the Dow Jones, S&P 500, basically the overall market, guys. So it is down for this week for two main reasons. So let's first start off with the beginning of the week, where North Korea is coming back into play. Again, a few weeks ago, they were giving us problems. They were launching missiles. Possibly a nuclear war was about to happen. Then the spotlight kind of drifted away from them. They weren't on the back burner. They were off the stove. Well, they came back on the stove. They're bubbling and hot. At this point, they're kind of urging for war to actually happen. Whether they'll actually prevail with that, no one really knows. But they are, I think they did launch some a missile over Japan into the ocean, and that's not nice. So keeping a close eye on that, as well as the hurricanes, especially with this new one. Just two bad things going on that brought the market down. For the Dow Jones Industrial Average, or Dow Jones, Dow, whatever you want to say, of course, the 30 of the largest companies in America, for them, they were actually down around 0.8%. Now, I wanted to show you guys that with these hurricanes, they hit the Gulf of Mexico for Hurricane Harvey, and also for this week, Hurricane Irma. There are a lot of oil refineries. Oil prices, especially at the pump, they got jacked up. They're really high right now. Oil prices jumped. And I wanted to show you guys Exxon Mobil. Of course, they're a very, very, very large oil company, and their price shot way up because of it. They're actually, just for this week, up over 3%. So you could see how things directly affect others with oil prices, the hurricane, and how that affects the company's stock price. Obviously, if they're jacking up the oil prices, people are paying more for that. That's actually good for the oil companies. You know, it's not a good thing to happen because obviously hurricanes create damage. But for the company, if people are paying the company more, it is better. Switching over to our other index, the S&P 500, 500 of the largest companies in America. For them, they were down around 0.5% because, again, for the same reasons, things were happening, North Korea and the storms. Now, quickly looking over at our charts for the S&P 500 fund that we have, they did close at $246.58 on Friday, slightly down 0.13%. And so far, look a little bit further down the returns. Since we got in 5 weeks ago, we are slightly down 0.34%. Now looking at the small cap fund that we're looking at, guys. Small cap has a bunch of smaller companies rather than our index. They have a bunch of large companies. So on the other end of the spectrum, they are much more volatile. So this week they were down a little bit over 1%. And switching over to our little chart over here, they did close at 52.27, slightly up on Friday, 0.27%. But since we got in a little bit further down, you can see the returns. since we got in 5 weeks ago, they are down 1.66%. After looking at some of the indexes that we're looking at, our S&P 500 index and small cap, let's get into the individual stocks. Starting off with, of course, biggest company in the world is Apple right now. For this week, they got hit along with the market. Usually if the market gets hit, guys, Apple does bad, or if Apple does bad, the market does bad. But they were down over 3.5%. And our chart real quick, they did close at 158.63. On Friday, they were down 1.63%. Jeez. But so far, our return since we started looking at them 5 weeks ago, we are still up of around 1.4%. So with Apple, again, for the coming weeks, we're going to be keeping a close eye on it. They are doing a bunch of releases, especially for the new iPhone that's coming out. So that's basically on everyone's mind with Apple stock right now. So it could be all over the place. Some people might think, oh, it's not going to do so good, so a bunch of people get out, and vice versa. So we're just going to have to see. We're just going to have to wait and see, guys. It could kind of go either way, but I'm going to assume, of course, I don't like to assume. I'm not going to, place bets to see if Apple's going to pop after the release. But that is possible. I do have some Apple holdings, so it's not like I'm going to buy or sell any. I'm just going to see how it goes. Moving on to the next stock that we have is Disney. Guys, Disney's been getting slapped, especially this week. Open hand slapped. Disney, for just this week alone, they went down, especially beginning of the week, around 4.4%, guys. 4-hour chart, they went below $100, guys. They haven't been below $100, you could see in the chart, since basically last year. But they did close at 97.07 since we started looking at them. You could see that return. That's a nasty return, guys. If we did actually invest 5 weeks ago, they are down, closing in on 10%. So looking into what's actually going on, again, Disney does own ESPN. Their numbers are declining, so of course their stock is declining. That's a huge part of what actually Disney is. I think it's around maybe half of their revenue. But they're actually planning on, for 2018, starting this, or rolling out late 2018, maybe 2019, but a streaming service of movies such as Star Wars, Marvel, and also Pixar. So they actually took down their movies off of Netflix, and they're trying to create their own streaming service. Now, it kind of seems like a good idea, but why it dropped so much this week is that the CEO of Disney, Bob Iger, I think it's Iger how you pronounce it, but he had an announcement, or a meeting type of thing, where he basically announced the year of 2017 was a reset year of Disney. Now, it's not a bad thing, but that definitely doesn't mean there's any growth in it. So that's why a bunch of people are getting out, especially for the remainder of the year. It's probably not going to do much. So that's why people are pulling out. There's not much growth for this year. But again, for the future, it could definitely change with that new streaming service. You never know. Star Wars series, bunch of stuff could happen. We'll have to see. And coming up to our next stock that we're looking at is Facebook. Facebook is down, similar to the market, of course, down around 0.5%. Coming over to the chart, they did close at $170.95, down on Friday of 1.3%. That's kind of a big move in a day. But since with Facebook, of course, they are volatile, could go up very quick, down very quick. But since we got in them, we are still up 0.78%. Moving right along to our next stock that we're checking out is Google. Google down of around or just over 1.5%. Moving on over, Google closing at $126.50. On Friday, they're down around 1%. Again, tech stocks are volatile, so that's why it could move fairly quickly. But since we got in, kind of flat, but slightly negative of 0.16%. And I wanted to move on to this point, guys, because it's that type of year. Yeah, Starbucks. We got Starbucks going on. Of course, their pumpkin spice lattes I could deal without it, but a bunch of people love them. But they are down for this week of over 2.5%. For our chart, they're still killing us, guys. But remember, long term, they did close at 53.49, fairly even on Friday. But since if we picked it up 5 weeks ago, we are still down of around 3.5%. I can't not look away from that peak, guys. And it's fairly far away from that. Slight rebound we're going to have to see, especially with that pumpkin latte stuff. I mean, what could I say? Like, it's Starbucks. Like, I feel like it's just a popular thing, guys. People are just going to go there, get their coffee. It's coming up on the fall season. It's that time. So those are all the individual stocks. And for the last one mutual fund that we're looking at, aside from the index funds in the beginning, our mutual fund, Fidelity Contra fund. They have growth companies involved with them. So since the beginning of this week, they are fairly, since we did have Monday off, they're fairly even. Closing at 119.19 just on Friday alone. They're slightly down 0.42%. But since we got in, kind of not flatline, slightly above that of 0.18%. So guys, we kind of are on a downward trend. A bunch of bad news keeps coming out since we started this this series of this weekly recap. I say continue to stay strong in the market, guys. There could be a rebound. Maybe not soon, but we're going to have to see, especially with the North Korea thing. Storm after storm keeps hitting us. But again, I would continuously suggest, if you're going to invest for the long term, do monthly contributions into it. And for the long term, you'll see that upward trend and growth. I personally wouldn't suggest getting in heavily for right now because, of course, it's unsure. I could be wrong. No one really knows. But if you have any questions, comments, concerns, guys, leave them down below. I love to hear what you have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money because not many people are, guys. Thank you so much for watching, and I'll see you in the next one. Who wants some pumpkin spice?